Hello there. Welcome back to Grade 10 Accounting. In this video, we are going to look at a question paper from June 2022. This question paper is going to look at the topic of final ledger accounts, whereby we're going to prepare the trading account and the profits and loss account. So we are going to go through those. So let's take note. A question has got 51 marks, and then it requires us to spend about 46 minutes on that question. Then on the required part, first part is trading accounts are 9 marks, and then we have got profit and loss account on the second part, which is 42 marks. So the following information is related to Pongola Traders. Their financial year ends on 20th February each year. The business is owned by P. Mahobo, and then we have got Pongola Traders. And when we have got pre-adjustment trial balances at 28 February 2022. Then on the balance sheet section, we've got the debit column, and then we've got credit column. So this is a trial balance that we are having. And then if you go down the list of balances in terms of the trial balance, you go to see that it's going down until here where we've got the totals of the trial balance. Then we can go to the next page. We see that we've got adjustment additional information. So we've got main adjustment that we have there ranging from 1 down there. You'd see that they are coming down to 11, and then this is what we have. So on the first part, remember we are going to prepare a trading account. So if you go there on the answer section, you'll see that you are given these are already prepared trading account and profit and loss account in the form of T accounts. So these are the ledgers that we are going to prepare. So on the trading account, we are seeing that we have already have some information that has been pre-entered in terms of cost of sales, profit and loss, and sales. So we are just going to make the adjustments that are necessary so that we get the final answer that we are going to put in this column for the debit side, and then on this column in the credit side. So I remember on this side we have the debit side. So this one represents our debit, and this one represents our credit. So basically this is what we have. So we can just maybe take notes in terms of the credit side and the debit side. So this is what we have. Then we are going to start with calculating the figure for sales. So we are just going to go there and try to see how are we going to calculate the figure for sales. So if you go to the list of balances, we have to pick the figure for sales first in the list of balances in terms of trial balance. If you come here, we will see that sales is here. We've got 875,000 there representing our sales. We are here. We are here on 875,000 representing our sales. So our sales is here. Then remember when we are putting our sales figure in the trading account, we have to put it as a net figure, whereby we are going to say sales minus sales returns. We are going to say, let's just maybe try to put the formula there. The figure that we are going to put in the trading account is the net sales figure. And we calculate it by saying sales, that is the total sales figure that we are given in the list of balances. You subtract debtors allowances. You subtract debtors allowances, or we can call them sales returns, or we can call them returns inwards also. And then if you have got any other adjustments that you're going to make there, you can just also adjust. But the general formula that we use, we say sales minus debtors allowance or sales returns, then we get the net sales figure. But we might have also some adjustments in the additional information that are affecting our sales. Then we can also adjust for that. So this is what we are going to look for in this trial balance. You see that we've got sales figure. Then we go to the beneath that we have got debtors allowances, 12,600. So you'd see that this 12,600 also is going to reduce the figure for sales. So remember, debtors allowances are sales returns. What happens on debtors allowances is that when you sell goods, the customer may retain the goods due to many reasons. Maybe they are of wrong type, wrong size, substandard, damaged products that we've sold, and the customer can retain, and then we call them debtors allowances or sales returns. So they reduce the amount for sales. So on the other section, we are just going to in brackets to show the working by saying 875 minus 12,600. But before you go there, you can go to the additional information to see if there is any other adjustment that is affecting our sales. So if you come here on the first part, which is 1, it reads invoice issued to a debtor, Mzala Kumalo, for computer sold to him on credit was omitted by mistake. Selling price 5,000, and then we've got our cost price 3,000. So you'd see that this was omitted. So Basically, it means it was not included as part of sales. It was supposed to be included as part of sales. So what are supposed to do? We are supposed to add this 5,000 at selling price because these are sales. But on cost of sales, that's where we are going to adjust using the cost price. So selling price, it means this invoice is going to increase the amount for sales. So we're going to say plus 5,000. So basically, if you go back there, we are going to say 875,000 minus 12,600. Then we add the 5,000 on additional information, which is here to get our final answer for sales. So if we come here in brackets, we are just going to summarize that. So what are we going to say? We have 875,000, so we can just say 875,000. And then we subtract the data allowance, which is 12,600. And then we add the invoice that was omitted, which is 5,000. And then we obviously close our brackets so that we find we fill in the final answer there. So if you do that, you'd see that the answer that we are going to get there is 867,400. So here we've got 867,400. So this is what we have. Then also we can go and calculate the figure for cost of sales. So we can go to the list of balance and try to see if we are given the figure for cost of sales. Cost of sales we are already given here is calculated as 500,000. But remember, we can in some questions maybe you might find that the figure for cost of sales is not given, but you are given the components of calculating the cost of sales. So remember, when you're calculating cost of sales, when we are calculating cost of sales, this is cost of sales. The formula that we use is opening stock or opening inventory. We add our purchases. If you have got purchases returns, we are supposed to subtract them. And then we add our carriage inwards if they are there, carriage on carriage inwards. And then we also add our customs duties if they are there. Then finally, we are supposed to subtract your closing inventory. But in this case, the figure for cost of sales is already given, so we are not going to calculate this. So on the cost of sales, so what we are saying is now the cost of sales you are given is 500,000. So we are going to put it as 500,000. But before we put this figure, we also go to additional information to see if we've got anything that is affecting cost of sales. So you see that on the first item, we also have something that is affecting cost of sales. That is this invoice that was omitted. We've got which is a cost price of 3,000. 3,000 on cost of sales was omitted also. So we're supposed to add this 3,000 to cost of sales. So we go back there. We see that the figure that we are given for cost of sales is 500,000. So we are going to add the 3,000 that is was omitted. So if you go there, we just summarize now in brackets on cost of sales by saying 500,000 plus 3,000. Then you add the two, you are supposed to get 500. 503,000. So this is what we have. So these are the entries that are supposed to be in the trading account. Then we can now see did we make a gross profit or a loss? So remember the figure for gross profit, we find it by saying, so gross profit is equal to sales minus cost of sales. So this is obviously will be the net sales figure. So if you find a positive figure, if your answer here gives you a positive, it means it's a gross profit, and if it's a negative, it's a gross loss. So this is what we have. So basically, what we are trying to say here, if the sales is greater than cost of sales, it's a profit. But if sales is less than cost of sales, it will give us a gross loss. So this is what we have. So this is the same that we are going to do here. So we are just going to compare the credit and the debit, whereby you've got sales on the credit and then the cost of sales is on the debit. Then the balance will transfer to the profit and loss. That's why we have the profit and loss on the debit. So this one has been pre-entered, meaning that there is a profit there. If because our sales, this shows that our sales is greater than our cost of sales. So the balance will be transferred to the profit or loss. So this is what we have. So we can just put our double lines there. Put our double lines. So what we are saying, our double lines, we can be here. So our balancing figure is the one that is being represented as the profit and loss. So this is basically our balancing figure. So in the trading account, what it means in the trading account, we are not going to have a balance sheet, but we are only going to say the balance that is there, we transfer it to the profit and loss. So if the debit was greater than the credit, it means our profit and loss was supposed to be on the credit side. So in this sense, we now compare the two and see that the credit is got a bigger total. So this is the one that is going to come in between the double lines both sides. We've got 867, which is the figure, 1,400. So it's the same that is going to come here, 867,400. And then on the balancing figure, we are going to say this total, a bigger total minus smaller total, 867,400 minus 503,400. Then we get the figure that is going to be transferred to the profit and loss here, which is 364,400. So here we are saying 364,400. So this is what we have. So, so this figure is going to be transferred to the profit and loss. So profit and loss is just beneath that. So we are just saying this 364,400 is this figure that is supposed to come here. Here, so you can just enter it here, 364,400. The same figure. So it means we are crediting profit and loss, and then we are debiting the trading account. If it's a profit, then if it's a loss, we are supposed to credit the trading account, and then we debit the profit and loss. So it's simple as that. So this is what we are supposed to do. Then on the profit and loss, we are seeing that we've got also some items that has been pre-entered. We've got discount allowed, bank charges, standard expenses, and what else. They have been pre-entered, and then we have on the credit side, we've got discount receipt that is pre-entered, and then we've got our trading account that we've just entered. So we are going to look for other entries that has not been pre-entered in the list of balances. So what happens on the profit and loss now is that all the expenses, we are just going to pick all the expenses that we are having in the list of balances and additional information and put them on the debit side. So expenses come this side, and then income will come this side. So this is what we have. So we are just going to go through the list of balances and then pick those and put on the appropriate side. So if you're here, you'll see that we have got our the first one that we are having. We can start here on the nominal account section, whereby we are having our sales. We are not going to include the profit and loss data allowance, we skip it. Cost of sales, we skip it. But we've got salaries and wages as an expense. This one is an expense, is 96,750. 96,750. So before you enter this figure, you have to check in the additional information if there's anything that is affecting salaries and wages. So you go through all the additional information to check anything that is affecting salaries and wages. So if you come here, you go down checking if you have got anything that is affecting salaries and wages. If you have nothing, it means you're going to enter it as it is in the list of balances. But if there's an adjustment, you're supposed to adjust it first, then you enter the net figure, the final answer in the profit and loss. So if you go down, let's try to see in terms of salaries and wages. Let's try to see in the balances that we are given. You can go down to check if we've got anything that is affecting. So we are seeing that on item 2 here, we have got something that is affecting salaries. It's saying the owner took goods for 1,200 every month for his own use. The bookkeeper recorded it as salaries. You see now. So it means in the salaries figure, we've got something that is not supposed to be there, which is something that was taken for own use. So remember, anything that is withdrawn for personal use or own use, we call them drawings. So here we have got drawings. Drawings, these are goods that are taken for own use or personal use by the owner. So these goods were the expense of these goods was included in the figure for salaries and wages. So what are you going to do? We are going to calculate the total drawings that are supposed to be there for that year, and then we are supposed to subtract it from the figure for salaries and wages. So we are told that the drawings were 1,200 per month, and we know that in a financial year we've got 12 months. So we have to calculate the total drawings for the year. So total drawings, what we are now saying is now we are saying 1,200, and then this is per month, and we've got 12 months, so multiply by 12. So if you multiply by 12, we are going to see that we get 14,400. So this is the figure that is inside salaries and wages. So you need to subtract it, 14,400. So basically what we are saying, if you come here, salaries and wages, 96,750, we are going to subtract 14,400 so that we get the net figure. So we are coming here on the answer section. We are saying for salaries and wages, we are here. salaries and wages. Let's just try to see. Let's see here. We are saying salaries and wages. Remember, we also have the working that we need to put there. So in brackets, we are saying the figure that we have for salaries and wages in the list of balances, we've got 96,750. So we are saying 96,750. Then we are going to subtract the figure for the drawings that is inside, which is 14,400 that we calculated. So we calculate the two. We are saying 96,750 minus 14,400. We are going to get 82,350. So here we are going to get 82,350. So this is the final answer that we are having. So we go there again to check another item that we are supposed to put in the profit and loss. Remember, we are looking for expenses and income. Then we've got fee income. Fee income also is an income, so it's supposed to go on the credit side of the profit and loss. We've got 8,400 for fee income. So we go there again to check in the additional information if you've got anything that is affecting fee income. If you don't have anything, it means you're going to put 8,400 as it is in the profit and loss. But let's go to the additional information and see anything that is affecting fee income. So if you come here, you find that item 4, rent has been received. Sorry, we are going to 3. The fee income of 4,000 rands not yet received by the business. What it means is not yet received. So it means this is an accrual of fee income. This is an accrual of fee income. Remember, all accruals, we can just maybe try to summarize here. If we have got any accruals, our accruals of both income and expense, we are supposed to add them because they relate to this financial period that we are preparing for. Then this is accrual, or we can call it owings. We mean the same thing. We are supposed to add them. Then if you have got prepayments, prepayments of anything that has been paid in advance, these ones we are supposed to subtract them. So why do we do this? We are trying to comply with the generally accepted accounting practice that is the matching concept or the accruals concept. What does it say? It says what belongs to this year must be recorded this year, and what does not belong to this year must not be recorded this year, but must be recorded in the appropriate period. So for accruals, what we are saying is this is an amount that belongs to this year, but has not yet been received in the sense of fee income, but it belongs to this year. So that's why we are adding it, because it belongs to this year. So on prepayment, what we are saying is we have paid something for the next financial period, so it does not belong to this year, so we remove it by subtracting it. So basically, that's what the matching principle or the accruals principle do entail. So this is what we have. So this 4,000, basically what we are going to do, we are going to add it to the amount, to the figure for fee income that we are given. So we can just go back to check the figure for fee income that we have. So here fee income, we have got 8,400. So we are going to add the 4,000 that we have for an accrual. So we go there. On the credit side, there we have got fee income. So what we are saying now, we are saying fee income, fee income. Then in brackets, you can just show the working whereby we are saying put 1,000. Let's try to see. Let's try to go back and see the figure for fee income that we are having in the list of balances. Fee income, fee income, we've got 8,400. 8,400, then we add 4,000. So we go back. 8,400, then we add our 4,000. So let's try to calculate that one. Let's try to calculate that one. If you do calculate very correctly there, 8,400 plus 4,000, and you get 12,400. So here we're saying we've got 12,400. So we go back to the list of balances again to check the next one. We have got rent income is the next one, which is an income again, supposed to come on the credit side. So on rent income, we have got a figure of 41,100. So we go to the additional information to check if we have got anything that is affecting rent income. But obviously, we are seeing that on 4, there's something. It's saying rent has been received for 13 months. The rent has increased by 300. Was increased by 300 per month with effect from 1 September 2021. So this is what we have. So we can just pick the amount that we have for rent income is 41,100. That is the figure that we are given in the list of balances. So what does it mean? So this figure that we are given in the list of balances, 41,100. It means this was the total rent received in that year. But we want to see if this rent relates to this period or not. So the additional information now is telling us what is transpired. So we go back, it's saying rent has been received for 13 months. It means it has been received for 30 months. It means there's a prepayment or something that was paid in advance there, because it is supposed to be 12 months, but we received for 13 months. So we've got one extra month that we received, which does not belong to this period. So we need to calculate that 1 month and then remove it, because it does not belong to this year. So what we are going to do now, we are told that the rent has increased by 300 rands per month with effect from 1 September. So what we are going to do, we are going to calculate the number of months when the rent increased. So we are seeing that it increased from 1 September. So the whole of September, October, November, December, January, February, because our end is ending on February. If you go back there to check where exactly is our year ending, you'd see that it's on 20th February 2022. So it's ending on 20th February. So exactly as we counted, they are saying September, October, November, December, January, February. So this was paid for 13 months. This means for March again, it was paid for. So again, March is there. So we count how many months were there when the rent was increased. 1, 2, 3, 4, 5, 6, 7. We have got 7 months that we have. Then so it means if you say 13 minus 7, you're going to get 6 months. So when it was not yet increased, it was 6 months. So this is what we have: 6 months before the increase, and then 7 months after the increase. So we go there and form a formula. You can just go there and form a formula by saying, remember, we have got 6 months before the increase and 7 after the increase. So let's say the monthly rent, we can just give it any unknown. You can say that let the rent, the monthly rent be X before increment, before it was increased. So we are saying before it was increased, it was 6 months. So if you say 6 times X, 6 times X, to get 6X, you get the month before it was increased. Then after it was increased, now it was increased by, let's go back to check there. We see that it was increased by 300 rands. So it means our X to be now X plus 300. So after the increase, it's now X plus 300, because X, and then we increase by 300. So what it means, this happened for 7 months. This happened for 7 months. So you're going to say X plus 7, X plus 300. Then if you calculate this, you are supposed to get the figure now that we have in the list of balances, which is let's try to see the figure for rent income, which is 41,100. So you go there and say it is equal to 41,100. So it's simple as that. Then you solve the equation. So just remove the brackets first, is then 6x plus 7x plus 7 times 300, obviously you get 2,100. Then you say equal to 41,100. Then obviously you group the leg terms, whereby you are saying 6 plus 7x, you get 13x, and then it's equal to 2,100 goes to the other side and becomes a negative. So it means we are going to say 41,100 minus 2,100. So we can as well try to calculate that. When we say 41,100, and then 41,100, and then you subtract 2,100, then you get your 39,000. So here you are getting 39,000, and then obviously now you divide by 13 both sides. You divide by 18 both sides. So this is simple solving of an equation. Then if you say 39,000 divided by 13, let's try to see. Then you get 3,000. So it means here we have got your 3,000. So this is what we have. So this is the amount before it was increased. And then the March that we want to subtract is March 2022, and it was already increased. So we want to see the figure when it was increased now. So when it was increased, remember we are saying the formula that we have there, when it was increased, we say it's X plus 300. So basically our X is 3,000. So we now say 3,000 plus 300. So it means we have got for rent income, we have got now 3,300. So this is the amount of monthly when it was increased. So we are going to subtract this monthly, which is for March 3,300 from the total that we have for 1,500. Then we get the figure for our rent income for that period. So basically, we got there. If you go there now, we are saying rent income on the credit side. And on the working part, we are saying 41,100. Then we subtract 3,300 for the one that was prepaid. So we get 37,800. So this is what we have. So we go again to the list of balances and check out the next item that we have. So we have got discount allowed, which is 800. Let's check if it's pre-entered there. Discount allowed, we are seeing that we are not having it is here 800. It's already pre-entered, so we can skip it. We go there again to check the next one. We have discount received 880. We check again if it's pre-entered. Discount received 880 is pre-entered. We leave it. We go again to check the next one. We go to the insurance 9,800. We check on insurance. We've got 9,800. Then we see that insurance is not pre-entered, so we go there on additional information to try to see anything that is explaining about insurance. We see that if come at 6, we've got something that is there. Let's come here. 6. The insurance amount included annual premium of 2,160 for the period starting on 1 December 2021. So remember, our financial year is starting 1 March 2021 and it's ending on 20th February 2022. So this is our financial year. And this insurance was from 1 December 2021. So December was along the year of in the middle or whatever, along the way of this financial period. So you need to calculate the months that are valid within this. So what we are saying is the only months that we are going to include there for this insurance is we are having 1 December, the whole of December, and then January, and then February. These are the only months that we're going to put, which are 3 months, which means at the 9 months that are inside 2,160, we are supposed to subtract them. So to get those 9 months, we have to provide for that prepayment. It means we have got months from 1 March 2022 to 1 March 2022 to the end of November, representing a prepayment. So there's a prepayment that is there. So you have to calculate the prepayment and then remove it from the figure of insurance that you are given. So what we are saying is we can just say, remember the month that we want to include that we want to remove from this or exclude from the calculation for 9 months. That does not belong to this period. So we are saying 9 over 12 times 2,160 to get the months that we are supposed to remove. So we are going to provide for that prepayment in the calculation. So we are going to say 9 divided by 12 there. 9 divided by 12. And then we multiply by 2,160. So when we get 1,620, so here it means we've got 1,620. So this is a prepayment that occurred. We are supposed to subtract that from the figure of insurance because it was a prepayment. So we come here, we see that the figure of insurance that we are given is 9,800. So we're going to say 9,800, then we subtract 1,620. That is the prepayment that we have or something that was paid in advance. So here we are saying we have got insurance. So on insurance, we are saying 9,800. 9,800. Then we subtract the figure for 1,620. 1,620. And then you calculate that, we get 8,180. So remember, insurance is an expense. That's why we are putting it on the debt side of the profit and loss. So we go again to the list of balances to check what's the next one that we have after insurance. Then after insurance, we see that we've got bank charges. But bank charges seems to be pre-entered. You can check. We can use that bank charges here is a pre-entered, so we can going to skip that. So we go back, check the next one. Right, after bank charges, let's try to see what we have after bank charges. We have got bad debts. Bad debts is 5,200. So we are going to what we are going to do on bad debts, we are going to pick this 5,200 and then check on the additional information if you've got any adjustments on bad debts. So we come here, come down, we see that we have got something that is explaining about bad debts there. We come here, right, on 5. Let's look at 5. Let's just look at item 5 and try to see what we have in terms of what is affecting our bad debt. So 5 is saying we are on year 5. A debtor who owed 1,200 rands was declared insolvent. And then next sentence, a dividend of 40 cents to the rand was received and recorded, right off the remaining debt as if covering. So it means what was received was 40 cents. So the remaining part was not received. That is the amount that we are supposed to write off. So what we are saying is, remember, this is the total should be 100 cents. So 40 cents was received. So it means the remainder was not received. So we're going to say 100 minus 40, and then we get 60. So it means this is our 60 cents that was not received, and it has to be written off. So our 60 cents, we always express it as a decimal, it becomes 0.6. So we are going to say 0.6 times 1,200. Then we get our figure that is supposed to be written off as a bad debt. So we're going to say 0.6 times 1,200. So we calculate that one. On bad debts, you're supposed to get 720. So this is what we have in terms of another bad debt. So we are going to say the one that we are given in the list of balances is 5,200, then we add our 720 to get the total for bad debt. So we come here. We are seeing that bad debt is an expense, so it's supposed to be on the debit side. So we are saying here we have got bad debts. So in brackets, what we are saying is we are saying the figure that we are given is 5,200 in the list of balances. And then we add the figure for 720 for the amount that was later turned off in additional information. And obviously the total amount that we are going to get there, 5,200 plus 720, get 5,920. So here's 5,920. So this is what we have in terms of bad debts. We can go back again on the list of balances to check the next one. We have got let's try to see. After bad debts, we've got telephone, 12,560. We have got telephone, which is 12,560. So we go to additional information to check if anything that is affecting telephone. Right, we check in terms of anything that is affecting telephone. We have got this one on item 8. Telephone account for February 2022 has not yet been paid, 450. What does it mean? It means February is inside our financial period, which is ending on 28 February 2022. So it means the February is inside. So this was not paid, so it's an accrual or something that is owing. So remember, we said when something is accrual or owing, we need to add it. So 450, add it to the figure of telephone that we are given. So the figure for telephone that you are given there is 12,560, then you add 4,450. 4,560, then you add this 450. Then we go there. Remember, telephone is an expense again. We are supposed to put it on the debit side. So we are saying telephone. So in brackets, what are we saying? In brackets, we are saying 12,560. Then we add the one that is owing this 450. Right, calculate it correctly. You're supposed to get 13,010. 18,010. So this is what we have. We go back again in the list of balances, try to see what is the next one that we have. Right. After telephone, we have got water and electricity. Water and electricity, but we see that water and electricity, we check if it's pre-ended. Let's check if it's pre-ended in our answer section. You see that water and electricity is pre-ended, so we are not going to adjust that one. We leave that one. We go to the next one after water and electricity. Right, we've got stationery 10,800. So what does it mean? This figure for stationery that we are given here means this represents stationery that was bought during the year. But the stationery that we want to put in the profit and loss is the stationery that was used, that represents an expense. And remember, for stationery, we can have stationery that will be there at the end of the financial period, and it represents our inventory or stock that we are supposed to put in the balance sheet under as part of inventory. But here we have got 10,800 representing the total stationery that was bought. So we can go to the additional information to see what is it saying about our stationery. Let's go to additional information. So stationery, let's look for anything that has to do with an explanation on stationery. Right. On item 7, it was so calculated February 22 reviewed the following on hand. We have got 15,500 for trading stock, then stationery 10,340 used during the accounting period. So stationery, it means the figure that we have is 10,340 representing the one that was used. So basically what we are doing there, we are saying stationery 10,000 10,340. 10,340. But then we can try to calculate how we arrived at 10,340. If you go back to the additional information, you would see that this one was the one that was used, and the one that was bought, we get it on the list of balances. The one that was bought is here, 10,800, and we used 10,340. So it means the remainder is the one that is remaining at the end of the year. If you subtract that, you see that we are going to get 460. So it means 460 represents the closing inventory of stationery. So on the other section, you can just summarize working in terms of saying to arrive at 10,340, you are now going to say 10,800 minus 406. So this is how we can summarize it, just to show how you arrived at 10,340. So here we are saying 10,800 minus 460. So this is what we have. Then after stationery, we can go back there to check what we have on the list of balances. So on the list of balances after stationery, we've got interest on loan 13,500. Interest on loan 13,500. But this represents interest on loan that was paid. So basically, what we have in the list of balances represents something that was paid. Then we need to see now on the additional information if this something that was paid, is it the actual amount that belongs to this period or not. If it's not, we listed with instruction in the additional information, then adjust for that figure to get the exact amount that belongs to that period. But here we just told that interest on loan, what was paid was 13,500. Then we go to the additional information to see if it is the 13,500 that belongs to this year. So if you come here, you see that interest on loan is calculated 18% per annum. Outstanding interest must be brought into account. Interest is not capitalized. So basically, what is important is that the rate is 18%. So we're going to calculate it 18% of the total that we have for loan. And then the answer that we get now, we compare it with the figure that was paid to see if it was the actual amount that was paid. So 18%, we are saying for 18%, we are go to the figure for loan. So for loan, we are seeing that we've got 100,000. We've got 100,000 there. Loan, your loan is here, 100,000. So maybe we can do this. Our loan is here, which is representing our 100,000 here. So we have got 18% representing interest of 100,000. So basically what we are saying, 18%, which is 18 over 100. Then we multiply by 100,000 to get the interest for loan for that period. And then this becomes 0.18 times 100,000 as a decimal. And then we calculate it, you're going to get 18,000. So this is the interest for loan for this financial period. But if you go there, you would see that what was paid was not 18,000. We paid less. So it means there is an accrual that is there, something that was not paid that belongs to this period, which is an owing figure. So interest on loan that we are given here is 13,500 that was paid. So it means the remainder was not paid. It's an accrual. So we're saying 18,000 minus 13,500. So we are saying 18,000 minus 13,500 to get the figure that is owing. And then if you do that, you're going to get 4,500. So this figure 4,500 represents something that is owing. So this is the owing figure. So it's representing the owing figure. So or here the figure of 18,000 is the one that you are supposed to put in the profit and loss. But in the brackets, you can just show to provide for this figure for owing. So you're saying to arrive at 18,000, you're saying 13,500 plus 4,500. Then you get 18,000. So this is exactly what we are going to do on the answer section. So we can go there. So we are saying the next one that we have there is interest on loan. Interest on loan. So in brackets, remember we are saying 13,500. And then we add our 4,500. Get our 18,000 that belongs to this year. So we go back again. Check after interest on loan what we have. Right, after interest on loan, we just maybe try to see. We have got sundry expenses 5,400. So this one is a pre-entered figure, we skip it. So this is what we have in terms of our list that was given there. But remember, we have got depreciation that is not included in the list of balances, but we have it summarized in the additional information. So we can come here and try to see in terms of depreciation. What are they saying about depreciation? So it's saying depreciation on equipment is 20% per annum on carrying value, while its depreciation on vehicles was correctly calculated as 69,000. So depreciation for vehicles already we have a figure, which is our 69,000. So the one that we need to calculate is this one, which is 20% per annum on carrying value on equipment. So remember the formula that we use for carrying value, using the carrying value approach, we are saying carrying value depreciation using carrying value method. The formula is percentage times the carrying value, where carrying value, we get it by saying cost minus accumulated depreciation. So basically, we are first supposed to find the carrying value, then you say percentage that we are given in terms of carrying value. So the percentage that we are given there is what is 20%. So we are going to use 20%. So here we are saying the percentage is what? 20%. So what we are going to do is calculate the carrying value. So we look for the figure for cost. We see that the figure for cost there for equipment, we go up there to check that figure. Right, for equipment, we are here. We are seeing that the figure for cost is here. For equipment is 140. The cost figure comes on the debit side. So 140,000. Then accumulated depreciation on equipment is 52,000. So we are saying 140,000 minus 52,000 to get the carrying value. So we are saying here 140,000 minus 52,000. Then you get the carrying value. We calculate that one. 140,000 minus 52,000. Remember, here it's 140,000. So we are saying 140 minus 52. Then we get 88,000. So it means our carrying value is 88,000. So this is our carrying value. So now to calculate the depreciation, remember it's 20%. We are now saying 20 over 100 times, this is 88,000 times 88,000 over 1. So remember, you can express this as a decimal way by saying 20 over 100 is a decimal, becomes 0.2 times 88,000. So basically, let's try to calculate that one. If you calculate the two, you're going to get 17,600. So here this means our answer is equal to 17,600. So this is our depreciation on equipment. So this is what we have. So total depreciation now we are saying this one plus the one that you are given in additional information for vehicles. If you come here for vehicles, you are given 69,000. So you're just going to say 69,000 plus 69,000 plus 17,600. Get the total depreciation that you're supposed to include there. Then you get 86,600. So we go there. We summarize that. So we are here, we are saying now depreciation. Whereby we are saying in bracket 69,000. And then we add 17,600. And then the answer that we are supposed to get is 86,600. Right. So this is what we have. This is what we have in terms of depreciation. We put interest on loan. And then also, let's try to look on other sections that are not included in the list of balances. Remember, we have trading stock. We compare trading stock uh, that is in the books and the physical stock count to see if you've got a trading stock surplus or a trading stock deficit. Remember, still trading stock surplus is an income supposed to be on the credit side of profit and loss under income. And then if it's a deficit, it's supposed to be on the debit side as an expense. So we check the figure for trading stock that you are given in the list of balances. We come here, we've got 16,300. That's the figure that we have. But we've got an adjustment that we have there in the additional information. You can go back to additional information and see that we at the beginning, let's go there. Right, at the beginning, we have got this one invoice issued to a debtor, Mzala Tumalo, for computer sold to him on credit was omitted by mistake. Selling price 5,000, cost price 3,000. So it means these were goods that were sold. So, but they are not recorded. It means these goods are no longer part of us. So we are supposed to subtract them from the closing stock because they were sold. So this 3,000 we subtracted from the figure that we are having there in the list of balances. So we are saying uh, the figure that we have in stock balance is 16,300. Then you subtract 3,000. So basically, that's what we are going to do. So we are saying trading stock. And the figure that we are having there is our trading stock is 16,300. Then you subtract 3,000. Subtract that, we are going to get 13,300. So this figure represents the book value. So this is the book value. So to get a surplus or a deficit on trading stock, we are going to say the book value. The book value. We're going to say the book value minus the physical stock count value. The book value minus the physical stock count. Then, so what we are going to do there is that after entering this, now the book value we already have it is 3,300. 13,000, sorry, 13,300 is the figure that we have. Then for the physical stock count, we go there to check what's the figure that we have for physical stock count. For the physical stock count, we are seeing that we are given it as 15,500. See it? So we are just going to put it as it is, 15,500. Right, we say 15,500. We see that it's we are getting a negative figure there, 13,300 minus 15,500. So 13,300 minus 15,500. And then you get your 2,200. So it means here we've got 2,200. And this is a negative figure. So to interpret it now, we are saying, using that formula of saying book value minus physical stock count value, if it's a negative, it represents a surplus. It's a trading stock surplus. If it's a positive, it represents a deficit. And when it's a surplus, we are supposed to include it under income. When it's a deficit, it's an expense. So in this case, we're having a negative. So it means it's income here. We're going to put it on the credit side as trading stock surplus. So you come here, we are saying on the credit side, there trading stock surplus. This is trading stock surplus. Right. So to get the trading stock surplus, you can just maybe summarize the working. We said 16,000, 13,300 minus 15,500. then we got 2,200. So this is what we have. Then we check again any adjustment that we are having there that still needs to be adjusted. Remember, we've got interest on fixed deposit. We can go down to check it. Right, interest on fixed deposit, item 11. The interest on the fixed deposit is still owed to the business at the end of the year. Interest is 11% per annum, is not capitalized. So interest on deposit, remember, is an income. So take note that interest on deposit is a what? It's an income. So what are we supposed to do? We are supposed to say calculate it as 11%, which is 11 over 100. Then we multiply by the total for fixed deposit that we are given there in the list of balances. You come here, you'd see that the fixed deposit figure that we have is here, 20,000. So 11% times 12,000. So we are multiplying by 12,000. What do we get there? Let's try to calculate it. You get 1,320. So it means here we've got 1,320. So this is the figure that we have for interest on fixed deposit. So let's try to see there is 1,320. Right, this is the figure that we are getting there. Let's try to verify if it's a correct figure. Yes, so if you see the figure for fixed deposit that you are using here, 12,000, it's not the correct figure. So if you come back here, let's try to see what we have there on fixed deposit. You are seeing that we've got 20,000. So we are just going to place that 12,000 with that 20,000. So if here we are now saying 11%, which is 0.11, we multiply by 20,000 here. So we're going to replace 12,000 by 20,000. So we are going to say 20,000 here. So if you multiply the two now, the answer that you're going to get the year, you are supposed to get 2,200. So you get 2,200. So it means our interest on fixed deposit is what is 2,200. So you come here, you say interest on fixed deposit. We get 2,200 again. So this is the figure that we have. So after that, now we can just balance your accounts whereby we are saying the total of the credit, compare it with the total of the debit. So if you add the total of the credit, you would see that it's going to be greater than the total that we are having on the debit side. So the total of the credit side is 419,880. So this is the total that is going to come in between the double lines, both sides. So we are saying here we can just put our double lines, and then we say the total of the credit is the greater side, which is 419,880. So here we got also 419,880. So if you say 419,880, then you subtract the total of the debit side, that you are subtracting all the figures that we're having on the debit side. We are going to get 173,870. So basically what you are saying is that this figure is 173,870. And this figure is supposed to be transferred to the capital account. Supposed to be transferred to the capital account. Remember, in the profit and loss, you are not going to have any balance CD or PBT. So any balance that you are going to have, you transfer to the capital account. So if it's a loss, it will be the credit side will be a smaller size here. So the balance figure will be here, and we're just going to describe it as capital, and then we transfer it to the capital account. So the double entry that we are having here is that on this 173,870, we are debiting on this one, the double entry that we have, we are debiting profit and loss, and then we are crediting capital. So this is exactly what we are supposed to do there. So this is what we have, guys. Those who have subscribed, please subscribe and share. We are still coming with more videos. Yes, for this video, signing.